All right. So let's talk about Strava, which maybe you're a power user, maybe you're not. Maybe we'll get there. I don't know. But you reported that the company has filed confidentially to go public. This is a business that we have been writing about for a little while at the information. What do we know about the state of that business?
Yes, I think Strava's gonna surprise people when its S1 comes out in a couple months. The business has had one of those unusual stories where it's been around forever. This company have was founded, when I was still in high school, so quite a while ago. And it has picked up growth as of late. So its revenue is between $400 and $500 million was what we learned. But it's growing really quickly. It's growing over 50% a year, which would make it the fastest growing or one of the fastest growing consumer apps on the public markets should it go public. So that should be interesting to at least some investors.
I guess it's kind of interesting with consumer apps. I mean, 50% growth is staggering for any company, but I guess the risk with consumer is that if it's in, it's in, and you can have a good year. But then if it falls out of favor, then we don't know what's going to happen.
Yeah, that's exactly. I mean, that's how I would think about the bear case as well. I mean, we'll see once we actually see more fully what the numbers in the story look like. But yeah, it could be a fad right now. But right now it's in, and there are run clubs all over the place. I just moved to LA. Maybe I'll join a run club. But it has like a decent sort of it's in with the fads right now. People like running. That's helped it grow beyond just cycling, which was kind of its original use case. But you're right. Like it could become not trendy very
Who
quickly.
who do you think would be a good public comp for Strava out there?
I think the one that I've heard is Duolingo. Just in terms of subscription business for that is sort of making money off of people's uh sort of hobbies or side quests, so to speak. So that's one that's sort of come up in my reporting so far, and I think
And
Martin Peers, our colleague, shouted that out last night as well.
well, and so one of the other things I've been thinking about is you talked in the story about, um, how sorry, getting distracted. We got some noises here in the office, folks, but we're still going on with things. You you had this piece in the story about the company being profitable, and we also wrote a weekend profile about the company a little while ago. And look, I mean, this is a business that I could have seen getting acquired potentially a couple years ago, just given the product suite that it has. Is this all just financial discipline that it's been able to acquire other businesses, or what do you chalk that up to?
Yeah, we don't know much about sort of whether there's been explicit M&A conversations. Obviously, there are larger companies that care about fitness that you would think and health that you would think would be logical acquirers. Apple, Garmin, you've obviously seen private companies like Aura, and you wrote about Whoop, sort of take off on more of the hardware side. So I don't know. I mean, I think it's logical to say this company is still pretty small. We called that out in the story. That revenue, that top line revenue between 400 and 500 million. That's not huge for a public company. But yeah, we'll see. We'll see how it trades after it goes public. If it doesn't do well, I think it'll definitely get bought.
Okay, so let's talk about another story that you published this week. You reported that you had some new reporting about Lambda, the Neo Cloud company. Tell us about what you learned there.
Oh, NeoCloud. It's getting interesting. About this time last year, we were all gearing up for the CoreWeave, or maybe not all of us, but I was gearing up for the CoreWeave IPO, which happened in March last year. Lambda is a bit seemingly its little cousin. It has a very similar business in that they're trying to become some of the next big cloud providers, but their key tentpole is access to NVIDIA chips. NVIDIA is both an investor and a customer, which is a similar dynamic to CoreWeave. And they're trying to go public. These businesses need a ton of cash. They have debt. And before it goes public, what we wrote yesterday is it's trying to raise raise at least $350 million in what's known as a pre-IPO a convertible note. And so that, we think is interesting, and definitely previews an IPO.
I got to be honest, Corey. It's kind of funny. You are seemingly the only person I know that gets more excited about the neo cloud sector than about Strava. I thought Strava was the more interesting business, but I guess neo clouds are like, I mean, they are very much in this
It's just
moment.
hard. They're harder, to unpack, or they're more controversial. Maybe like Strava is. It is what it is. I don't know. It's a consumer app that people use, and it makes money. NeoClouds always generate a lot more conversation because people don't know what to make of them. They are more interesting and weirder kind of financial animals. Like I said, they have debt. They all grow really fast. Lambda is growing sales about 80%. But I think the question with them is like, what's their IP? What is this company? Sort of, does it have a lasting business strategy beyond just being able to capture the AI boom?
Now, you had this line in the story that I want to read. You said the terms of the new financing would pressure the company to list publicly. The deal, which is structured as convertible notes, would force Lambda to award participating investors millions of dollars of additional equity or cash interest payments if it doesn't go public within a year. It, I want you to explain that a little bit to us. And broadly, the point I'm trying to get at is, these complexities in deal terms. I mean, is that becoming more common in this moment in AI? Talk a little bit about that.
It predates that a bit. I would take it back about a decade now. It really, these kind of pre-IPO, structured rounds became much more popular when there became kind of a bigger rush of capital into the private markets. There became a deeper pool of investors that were interested in getting a piece of companies before they went public. A financial instrument like this, it's designed to protect investors' potential downside, as well as giving them a piece of, a potential upside rocket ship. And they're meant to, they're designed to be raised fairly quickly, and so that it removes some of the haggling over something like a valuation.
Great. Well, Corey, I want to thank you for coming on. That is Cory Weinberg, our Deputy Bureau Chief of Finance here at The Information.